we know the bigger picture. I've shown the SPX breaking down versus the PPI chart, right? So I'm just going to go down through a few of the charts that I've been posting recently. All right, let's do this one here. So it's always, if you want to remove analysis paralysis, you need a weight of evidence approach. So you need to understand the bigger macro landscape, what has changed, and then after that, when you have breakouts or breakdowns for certain ratios or instruments within these macro defined periods, you want to know if that it will be a false breakout or it's just, yes, you buy the dip and it's continuation move. So the biggest chart that's actually giving us a clear signal is a producer price index breaking down. Producer price index breaking out versus the SPX. So right here, this is 1915 all the way down to 1929, 30 breaks out. So what does that mean is inflation's there, producer price is outpacing SPX, capital flows are going more into the producer price than they're going in the SPX or growth stocks. And look, this is just one part of the element. So once you're above this early breakout line, then you're more susceptible of having inflation waves or gold going up or silver going up or increases in loss of purchasing power. Your inflation adjusted US dollar is going to go down more in these periods. One wave, two waves, three waves within this larger secular move. And once higher low, higher low, higher low here in producer price index. And once it breaks down, I could have drawn here a support line. Once it breaks down, goes in sleep mode, then inflation's low, inflation calms down, it's not, everything's coasting, growth stocks go up. Here's the producer price index, see it's going down versus the SPX. That means everything is the golden years, the Nifty 50, all that stuff there, it's going great all the way until it refuses to go lower. Producer price index refuses to drop versus SPX. It does a breakout, early breakout, and then you get three waves of inflation. And everybody, oh, no more inflation. It was just one cycle. But once you're above this early breakout line, the chances are of having just one upward cycle of inflation, they're minimal. As you've seen before, three cycles once you're above the early breakout line. Higher low, higher low, higher low. Could have drawn here a sleep mode line. Once we're below that, producer price index goes back into sleep mode versus the SPX. And now what happens? It's low inflation, just calm for the storm, just goes sideways, sideways, sideways. Here in the 2000s, and this was pretty powerful. Early breakout line, gold bottom here, higher low, higher low. Inflation, you'd have to zoom in. So this was a bullish cycle in the reflation. So in the disinflation cycle from the 1980s all the way to down here, inflation was going up. You could see, I would probably have to zoom in, but it didn't go up to the extent that it went up in the 40s or 30s and the 70s. But I could have drawn here higher low from 2000, higher low, and then breakdown line. So within this long-term disinflation cycle, there was less disinflation as the inflation went up during that disinflation cycle. And gold went like, I don't know, from 250 all the way to 2000. So that's pretty powerful, even without breaking above this critical paradigm shift breakout line. Because you got to notice this. If you don't have 100 years of data, you don't see this line. 1, 2, 3, 4, 5 touches. This is a magnet. This is begging eventually to get tested. So we're probably going to top out in gold and silver and commodities once the producer price index has outpaced so much SPX that ratio comes and hits this magnet line. And then after everybody's looking for a move to the stars, this is probably going to be later this decade in 2030. And that we know that will be time for us to take major profits and rotate out of inflation sensitive instruments. So look where we are today. It confirmed breakout 1, 2, 3, 4 touches, breakout above this early breakout line. So this is another one of these cycles that the producer price has signaled us versus the SPX. So it's done. So at the worst, I see this as at least one cyclical inflation bout. But you gotta take this. Look, this also broke out, contrary to 2000. This actually broke out of a 40-year base, guys. This is huge. Just like here, I don't know, it was a 20-year base. It broke out in the 70s. Kind of messy before here, maybe a 10-year base. This is a massive, massive base that just broke out of. And we're just still in the first inflationary cycle. Look, maybe they're expecting to start turn down. Eventually, yeah, it could turn down, go sideways. I don't know how this is going to look like, but it just broke out. So it's fair to say that we're just also breaking out. It hasn't been 10 years that the SPX, that the producer price index has been outpacing the SPX. It just started, guys. Look, these cycles, they last 10 years, 2000 to 2012, 1968 to all the way to 1980. Here's another one from 1930 all the way to 1940. Like they take a long time before. So the cycle just started. This is just the first wave. I don't know how high it's going to go. But after that, there'll be a little breather, and after that's going to go down and then go back up. So this is definitely the first inning of all this mayhem that's unleashed ahead of us, right? And along the way, there'll be narratives and stories. There's no inflation. There's disinflation, but you can't position your trades according to the headline news, guys. You got to understand these bottoms like this here, they don't happen very often, right? These early breakout line breakouts, they happen now, once, twice, three times, four times in 100 years, four times in 100 years. Let that sink in. You're living it right now. And if you don't understand what's happening and the macro landscape as defined by these charts, you don't understand where you are, then you'll be always fighting emotionally the headline news because they'll make no sense. Oh, gold's not going up, inflation's up. Then inflation, it's the end of the world. It seems like disinflation or deflation, and then gold actually starts bottoming it. But you don't believe that it's bottom and turning back up because you have in your mind what the headline news are telling you. Oh, it's deflation, it's the end of the world. But gold knows. And you have to trust the chart that any dips and pullbacks above this early breakout line are meant to be bought while the opposite, while you're below these sleep mode lines, you do not buy them, you sell them. And it's just, guys, it's history cycles repeating again. So without a 100-year chart, you can't see the frequency of this behavior that happened in the past. So I'm going to keep it short, guys, for today, but you really, really, really got to understand that we're just starting. So you can zoom in on smart time frames to get better timing. That's fine. But deciding to short gold or silver is a dangerous proposition from a risk to reward perspective when you see this. So, all right, guys, carry on. Thanks for watching. Ciao, guys.